Good evening. This is the Elliott Wave update for the S&P 500 for Sunday, February the 6th, 2022. The markets on Friday did pretty much what I was expecting based on Amazon's earnings and the fact that we were also within a weekly Friday expiration cycle. The markets did end up sliding higher pretty quickly on the back of Amazon for the most part, but we also saw some strength in some of the other component stocks here in the S&P. But then within that last half hour, they started to slide lower. I'm going to open this up just a little bit more so we can see inside. They began to slide, oh, come on, don't do that. To slide lower on Friday, right within that last hour. And they closed back at the 50, the hourly 200 moving average. So when they broke the 50, they started to accelerate and then ended up finishing just above the hourly 200. Now, as we have opened today, initially, they ran the market up and they got almost back to 4,500 before now we came back in, and now we're beginning to sell it off. Not really hard at the moment, but now we're starting to see it pick up a little bit more over in the Nasdaq and the Dow, and then of course the S&P will obligatory have to follow down simply because of all the stocks that are involved in all those indexes. Now, what could this be? What could we be witnessing right now? If I'm considering that the intermediate wave 2, I'm going to go back out here so that I can take a peek at this larger picture. So once again, this is the 4-hour chart. We have the 5 all the way up to the cycle 5, and above that sits super cycle wave 3. So we're already in the beginning stages of that larger corrective phase, which is going to roll out over several years. So initially, we've counted down, and on a minor degree, 5 waves down, and that came in at the low right there at 14,002. Come on, tell me what it is. 212, I believe it was. And then that completed the first larger intermediate wave 1. Now, the alternate, as I've been showing and also discussing, is that it is either intermediate wave 1 or intermediate wave A. We won't know how else we're going to count that until we've actually completed this next sequence down. Now, going back over. So there was intermediate wave 1. We've got the A, B, C. So intermediate wave 2 or B finished here at 45.86. So we're starting lower from that level. Now, I'm going to go back down to that hourly chart. And actually, I'm going to go back down to the 30-minute chart so we can even get a more closer view of what is now unfolding. So if we have wave 1 up there, and this would be, come on, thank you, wave 1 of 3. So we've got intermediate wave 2. Now we're going to count 5 waves down, and that doesn't look right. Let me go back out to this hourly chart. My charts just sometimes just don't want to work well. So now let's open it up. Thank you. There's wave 2. So we have wave 1, 2, 3, 4, 5. Wave 1 of 3. So we're now working on an intermediate third wave or an intermediate C wave. Now, the difference between the two is barely nothing. Both are going to be 5-wave sequences. Each are going to consist of 5 waves of minor degree. Both would be expected to accelerate lower, show more strength to the downside than to the upside. They might get a little out of hand at times. Both carry the same characteristics and the same personalities, a third wave and a C wave. So if this is wave 1 of 3 or C, this is wave 2 of 3 or C, we're coming off in that 3 of 3 move. What can we expect? Expectations would be for the market to begin to accelerate, which means on the hourly chart, it breaks cleanly below this 200 and closes below it. And that again will start to produce some stronger acceleration. We're going to break below 44.45, break below 44.38, and begin to head lower. So we have some basic, let me pull this back up so I can just start to get a little bit more room in here. We have 44.45, 43.58. Again, you can see coming off, those are very minimal. We're looking for a third wave. Third wave, we're looking for it to come pretty far down. And oh, come on. Where wave one would be equal to wave C, will be down here at 39.90. Now, you would think, okay, so we had all this great earnings from Amazon. Should we be expecting something else to carry the market higher? Well, what do we have left in terms of the larger companies? We have NVIDIA, Square, we have Intuit, we have a few, we do have some, but the big boys, they're all done. We have AMAT, but that's not going to have that much influence in terms of weighting. So the larger weighted stocks are done. We've seen them. We've got Google, we got Facebook, we've got Amazon, we had Apple, we had Microsoft, we've had the larger, we have Tesla. So those are all pretty much now complete. Now, so having this market start to accelerate to the downside, even with the balance of some good sized earnings still able to come out, even if they blow the doors off. We now witnessed on Friday when the selling got intense, it didn't make any difference. Amazon dropped over $100. Boom, earnings or not, it dropped. Now, whether they want to walk in tomorrow and push it back up, that's yet to be seen. Now, what can we expect? If it starts to accelerate to the downside, then I am looking for the market to start giving up the ghost, so to speak. Now, we just saw the buyers are starting to move back in as they prepare for the Asian markets to open. So we were heading this way, they've stopped, and now they're heading back up. In fact, they just rallied pretty strongly right off of this low as the next line of markets move in. So instead of breaking below, which it did and accelerated, is now looking to break back above. So if it breaks back above, we have a possibility where with this little wave two is not done yet. So we have one, this is annoying. We have wave one down, then we have A of two, B of two, and we do a C. C wave can come all the way back up, get as close as it wants to 45.86. That's the completion point of wave one, excuse me, of wave two. Actually, wave one, starting point for wave one. Boy, got to catch up with myself here. Sorry about that. So this would just be a continuation of the second wave. Now, downside, we're looking at it to accelerate and just go all the way to what we just saw. Right now, that 200 remains in play. We've got the 8 sitting at 44.91. Then we've got the 20 sitting just above that at 44.93. Then we got the 50 at 45.03. All should be providing resistance on the way back up. Breaks above them should give an additional boost for the buyers to start moving back in and pushing the market up. Expectations, if it's a continuation of a C wave up, yeah, let me just draw some quick extensions, which will give us a clue as to how high this possibly could go. But that would count on that the market does not drop back down below that low, 44.79. If it drops back below 44.79, then it's the downside scenario. So right now we have potential where we can come back up to here, 45.36, 45.45, 45.52. But I wouldn't think we're going to get too much above that, even in the C wave up. So we have the C wave up scenario. We have the a third wave down scenario. So either C wave or a third wave coming off. Both a C wave or a third wave carry the same characteristics. So it would be serious downside. A lot of acceleration, breaking through support, breaking below moving averages on these higher time frames, and really starting to head lower, breaking below, as I've just demonstrated, all the way down, with that lower below 4,000 number being the likely completion point for this segment. Not for the whole move, but for this segment. A move up, I do believe, has some limitations, but the market may choose to do that first. So ultimately, I would expect continued turn lower, unless the market can pick up enough steam and it's going to get itself above 45.86. Then we're into a different scenario. And should that occur, we'll cover it then. I am not expecting that. I think there's enough pressure to the sell side as this thing starts to build. In fact, the news has just come out. You can see it right here. The US is sending jet fighters and warships to the United Arab Emirates. They want to be within striking distance of the Ukraine. That situation getting very serious at the moment. Once again, they're not using the word imminent, but hey, this is what's going to hang over the market. And so we'll see markets reacting to and on that basis. So I'm going to leave it right here. We have the upside scenario. It's limited. We have our resistance going up. We have our support coming down. Both would carry some acceleration if we can get ourselves above the moving averages. The acceleration, in my opinion, will be stronger to the downside, but a C wave up, yeah, it carries a lot of the same characteristics, but the limitations are coming on just in the size. Whereas the size of the wave 3 going down, we're definitely looking for it to break below 44.38 and break below 4,000 eventually. So we'll break below 44, break below 43, et cetera, before all is said and done. Am I looking for that tomorrow? Not necessarily. So this is where I'm going to leave it for right now. We have an upside scenario, we've got the downside scenario, and what expectations would be should either one start, we know what to expect, and should we notice that, then we know where we're going to go. Okay, next update. Monday, the 7th of February.